Hello, I'm Eric Pettway, Chief Investment Officer at Journey Advisory Group. Welcome to CIO Corner. The last 2 weeks have been a tale of 2 weeks in the market. The final week of October saw U.S. markets rise, with the S&P 500 up 0.7% and the NASDAQ 100 up 1.9%. Then last week turned negative as the S&P 500 fell 1.6% and the NASDAQ 100 dropped 3.1%. November typically outperforms, but this year started slowly. Still, we remain optimistic due to the stronger than expected earnings. According to FactSet, S&P 500 companies' third quarter's earnings grew 13% year over year, exceeding the initial 8% forecast. This week, investors await news on a potential U.S. government reopening. Sunday, we had a positive news of a Senate vote, and the markets are up on that news this morning. We also have earnings reports and economic data this week. October's CPI and PPI may be delayed to the end of 2025 due to the shutdown. Now it's time for Chart of the Week. The Social Security Administration announced a 2.8% cost of living adjustment, or COLA, for 2026, reflecting continued but slowing inflation. For the average Social Security beneficiary, the monthly benefit will be about $2,064, an increase of only $56. While any increase helps, this modest adjustment pales in comparison to the 8.7% increase in 2023, which was the largest since 1981. The challenges for retirees is that the COLA is calculated using an index that may not reflect the inflation that they actually experience. Healthcare costs, housing expenses, and other categories that weigh heavily in retirees' budgets have often risen faster than the overall index. For example, medical care services rose 3.9% over the past year, health insurance increased 4.2%, and home insurance climbed 7.5%. Food prices increased 3.1%, but meat, poultry, and fish rose 6%. With life expectancies to continue to increase, many retirees will live into their 90s. Planning for multi-decade retirement periods require portfolios that can provide both income and growth. Understanding how to structure portfolios for these extended timeframes while managing withdrawal rates and adapting to changing market conditions underscores the value of comprehensive financial planning. The bottom line, despite government shutdowns, trade tensions, and other uncertainties, markets continued their strong performance in 2025. Maintaining a portfolio that can navigate these challenges remains the best strategy as we approach the end of the year. We hope the CIO Corner and the Chart of the Week are helpful in these uncertain times. If you enjoy JAG's content, follow us on LinkedIn or your preferred social media channel. If you have concerns or want to review your portfolio, contact your JAG team to discuss your goals and stay on track. And remember, remain calm, stay focused, and most importantly, stay the course.